All right, super. So Jacques, thanks so much for joining us today and being part of GSD Network. It's great to have you here. So for all of you out there, Jacques is the first billion-dollar company from Orlando, Florida. Was 1.04, right over 1 billion. And
That's
the
right.
company's called Stax. So it's great to hear your story. Keith, by the way, before we get started on this, you should you need to contact Diane because Magna Group wants to talk to you.
Great.
Right. So
I'll reach out to her. Thank you.
Okay, thanks. Anyhow, so Jacques just incredible. I mean, his background, his technical background, started Stax, has exited Stax at this point, and actually he and I are going to be doing some things together. So FYI, so stay tuned for some preview of coming attractions.
Stay tuned.
Yeah, and anyhow, I mean, it's incredible. So how did you go about it, Jacques? I mean, to come to graduate from University of Central Florida and to create a billion-dollar company, what's that journey like?
Well, everyone always thinks it's an overnight success, but I definitely had other attempts at startups before then, and just making sure that I learn all of the lessons along the way, not forgetting those things. And I got a little bit further each time. And so the most recent one, I got further than all of the ones in the past. It was the third company that I founded. I've also founded a few nonprofits as well. And it was the first one to go unicorn, and hopefully I'll have as many as you someday.
Oh yeah, no, we're going down through it. That's for sure. I'm sure the next one we work on is going to be that. So, and we've got a lot of potential unicorns here. So with each one of the companies, one of the things, Jacques, we go down through and we really look for the best of the best, right? So Dave has done an incredible job with his company called The Safe Steps, working with indigenous people. Carolyn's got a phenomenal background. She actually was at Stanford as a researcher. Then she was in Hollywood. I mean, she's done so many things. It's off the charts, but great to have you here. Brianna's over in Toulouse. And so we've got a mixed group. Dirk, you're in Germany right now, correct?
Switzerland.
Switzerland, okay.
Yeah.
And Keith, you're in Los Angeles?
Yeah,
area.
Los Angeles. Yep.
So, and Sanjay's, I don't know where Sanjay is today, but he's at the Hilton in Fort Lauderdale where he has a place, or where are you today, Sanjay? You're on mute.
That was yesterday. I'm downtown today.
I see. Okay.
Lauderdale.
So anyhow, but they all have a dream. So Jacques, when you go down through this, there's ups and downs and ins and outs of building a billion-dollar company. For you, how did you go down through mentally in terms of dealing with the downs to keep yourself up? And then how did you not get so caught up in it that when people start to say, oh, this is the billion-dollar company, and the governor calls you up, I'm sure, and the mayor, and they want to pose with pictures, and you're all over. How do you deal with it? How do you deal with one is keep yourself out during the downs, but then not start to believe in drinking the Kool-Aid when you're on the ups,
That's a very dangerous thing, drinking your own Kool-Aid. I actually lean on Stoic practices. So I don't know if any of you've heard of Stoicism, but one of the practices of that is they use in actually cognitive therapy today in modern times, but it's really just focusing on controlling your controllables, right? Like understanding like things happen to you. You don't have to have an opinion about it, right? Like you don't have to assess everything as good or bad. And so that just takes a lot of energy, right? And then really just making sure that you're focusing on what you can do, what's within your sphere of control, and kind of not worrying about everything that's outside of that. I mean, we don't wake up every morning, worrying that the sun isn't going to rise, right? Or something. I mean, it's an extreme example here, but things are just going to happen, and really just gotta modulate your emotions. And to your point, on the extreme upside as well, right? Because the deeper chasms come when you're riding a high and then something doesn't go as planned, right? But if you can, set the right reaction for yourself when those, you go do the press conference, you're feeling good, some announcements made, and you just say, okay, it was great. I got a little dopamine. Let's not live in that world too long. That's in the past now. What do we do to get to the next step? And you're going to prevent. That's a very good preventative technique. Yeah.
So when you knew that they were going to do the, when you were going to cut the deal with them, how did you feel that minute?
You mean our last funding round?
Yeah.
Yeah. It was a little bit surreal at first, but I did have a moment where I sort of let myself go, enjoy the moment. We had an internal day where we sort of announced it to the company before, while all the press releases were on moratorium when we were making our unicorn announcement. But I think it was a moment of like also recognizing that it's not like I did it by myself, right? I had co-founders, but we also had all the people in the company. We also had all of the early investors who took a bet on us during our seed stage, and all of the talent that had stayed with us throughout the journey. We had like employees number 1, 2, and 3 were still with us, and I thought that was just an amazing thing that they're not only still there but actually participate in the upside. That was really important to us for all of the early employees.
Wow, that's fantastic. So, for the folks that are here today at GSD Network, what questions do you have? I can go down through and we can have this discussion, but I want each one of you are going through the same journey that we've gone through, right? So what questions do you have in terms of the journey? Go ahead, Brianna.
Yeah, I would say, well, what you mentioned you have experience before working in startups, but what made you kind of get with the idea for this one that stuck, and kind of what was that process, how you started?
Yeah, a lot of, I won't say that in retrospect, I could pretend there was a master plan, but a lot of it was serendipitous, right? Really just being open to opportunities, and doing things that feel right. I think that when you have a mission, at the end of the day, you can find a way to make money. You can use skills that as an entrepreneur are very portable from one venture to the next. The product sometimes doesn't really matter that much. It's like how you execute the idea. There's a lot of great ideas that come out there. But as my co-founder likes to say, Sunira, and I think I've heard this quote before as well, but there are no billion-dollar ideas, right? There's only billion-dollar execution. And so, yeah, that's kind of what it's all about.
That's great. Keith, do you have a question?
Yeah. How early in the process did you decide to raise outside capital versus investing your own? Where were you and what stage and all that?
Yeah, I mean, we pretty much went out of the gate knowing that we wanted to raise a lot of capital. Not immediately, not right away, like at the right moments, right? And so, the moment that we were able to establish our unit economics, we were basically able to prove that if you put in a certain amount of dollars here to acquire a customer, this was the lifetime value that you would get when you come out, right? So it was very formulaic in how in how you would get your return as an investor in the valuation of the company. And so once we proved that out, we raised our first round, and then really between rounds, what you're doing is you are deploying that capital, and this is how I think of it, right? Is when you get that fundraising round, you are then deploying that capital, improving the thesis that you had originally raised the capital on, right? You shouldn't be using it to necessarily just like fund tactical operations. It's to prove a thesis, right? And so we were able to prove that the unit economics could scale to a higher amount, right? We were able to prove through certain digital channels. And so then, we come up with a new thesis, raise some more capital, come up with another thesis, raise some more capital. So that's sort of how I see the milestones developing on when we decided to raise capital.
And is it, how much capital did you raise in total, John?
Over 300 million.
So you can imagine, going down through and starting a company with an idea to raising $300 million. So, if you look at it, what are the keys to success as you were going through this journey? What were the keys to success for you?
Look, I know, so just kind of segueing on the point of raising capital, it's always kind of a question mark in founders' minds. Like, do I bootstrap this? Do I raise capital? It's not there's not a one size fits all answer, right? And sometimes both can be good options. Taking capital is generally a dilutive event. And then when you take too many rounds, like, you end up with a smaller and a shrinking portion of equity on the cap table. The question you have to ask yourself is, am I going to have a better outcome? Do I want to have is a slice of a really large pie still bigger than 100% of, a really small pie? So those are and sorry, remind me of the question. I kind of went off on a tangent there.
Keith, what was the question?
Well, my question was just how early you decided to raise, but
Yeah,
you already answered that.
Yeah, and my thing was, if you're going down through, what were the keys to success in terms of building a company? What's the jitter between, so if you look at it, for me, it's like the soft side of it, believing in your dreams, visualization is critically important, because if you don't believe in yourself, you ain't going through this journey. It just doesn't work. The other thing is you got to have people that are smarter than you are, right? You always find people that are smarter than you or can complement your skill sets. And it works. And the other thing is you got to go out and understand that it's critically important, my perspective, to be able to connect the dots worldwide, right? You find people that have the capital, ultra high net worth individuals, those VC funds, and you get them on your side as your cheerleaders. And when they're on your side, of course, they control the capital and they know a lot of the people. They can do those introductions. So anyhow, from your standpoint, I mean, if you look at it, three things as you were going down through it, what were the most important that helped you build $1 billion company?
Yeah, I think, not really understanding the resources that you have, right? I think people undervalue the kinds of inputs that not only your advisory board, but even the investor board can have, right? Like, they can help bring on executives who have experience in a particular area that you're looking to grow. Some of those already come with a book of business that you can tap into right away. So you're essentially almost acqui-hiring parts of your market share. There's also just making sure that everything that you do. I know a lot of you, maybe not all of you, have technology-based offerings, but just think of everything, whether you're building a product or a service or a SaaS product. Everything has to have some sort of ROI. It doesn't always have to be immediate, right? But it should have some sort of a guiding ROI, as well as something. What is your thesis for the market, the problem that you're trying to solve, and your mission. And so I think that is an area where I've seen a lot of teams miss the mark, is they'll build something because they think it's cool and people have told them that it's cool, and so that is maybe the one danger. I do think talking to customers is really important, but the one danger of like customer-led roadmaps is you also have to be able to monetize that investment that you're putting into the product. So really having a plan for all of the assets that you have, all of the assets that you're creating, and making sure that you're commercializing them, you're taking them to the market, and they're somehow adding either enterprise value or direct revenue contribution. And I think I hinted to this as well, which is talking to the customers. I love having all of my engineers taking support tickets directly from customers, right? So like if there's something that's painful, and they get the same request enough times, they're going to go and fix the problem. But they're also going to understand, what the true use case is of the things that they're building. A lot of product decisions get made at the engineering level, right? You write a little user story, but it doesn't always tell you, where to place the button. Maybe it does not the exact color, or, what happens in a negative scenario when it fails. And so understanding the user gives you a better idea of, what they ultimately are wanting to do from a user experience standpoint, and providing a better outcome. So just always talking to customers, no matter how high you get in the business and how many people you have that can talk to customers. If you as an executive or founder are not talking to customers on a daily, weekly basis, then I think you're gonna miss the boat and reduce your chance of success.
That's great. In fact, there's a book that Bob Dorfman and Steve Blank wrote. So if you get a chance, to Startup Owner's Manual, and they talk about customer development and validation. It's really important. And so when you're building a company, before you start spending too much money, go out and start talking to folks, even if you got PowerPoint presentations, which is what I've done. My rule is a rule of 50s. I go out to talk to 50 people, and it's not easy. I would walk down the street in Palo Alto, and I would go into cafes and say, what do you think of this? And then the last thing is, would you pay for it? And so anyhow, do that. It's really important for you, because the last thing you want to do is build something nobody wants. The reason I know it, because I did it one time. I made a big mistake, and I sat on $1 million for 3 years, and nothing good happened. I got out of it, but I thought I knew better. Now there are some that do, like Steve Jobs, but there aren't many Steve Jobs. So for most of us,
Not too many.
yeah. You want to go out and you talk to your customers. So Jonathan, you have a question. So
yeah, and didn't introduce myself earlier, but I'm Jonathan Chester from a company called Bitwage. We process Bitcoin and crypto payroll services for paying workers globally. So you kind of touched on this a little bit, but I kind of wanted to dig a bit deeper into like, what are like the problems that you've actually like faced and like ran into, that we should like, how can we learn from maybe some failures that you ran into and had to overcome?
Oh, I don't know if we have enough time for all of my failures. But each one is gold. I think let's go meta for a moment, right? And one thing that I've definitely seen a lot of founders who've had early success and then weren't able to replicate it. Maybe the first one was out of the gate a hit, and that's because they've sort of in a way calcified their worldview by that initial success, and then are not able to learn from their future failures, right? And so I think the first answer to your question is to actually learn from the problems that you face. So every time you have a failure, it's you want to ingrain it in the culture, not only of yourself, but in all of your teams that you'll eventually be growing, that they need to be doing retrospectives, right? Like, okay, how did we do last week? What went well? We always say start, stop, continue, right? So you have a session, say, what do we want to start doing that we didn't? What do we want to stop doing? And what went well and that we want to continue doing. So being able to do that reflection, I did that for myself personally after throughout every startup, but also after each one, and saying, well, maybe like my first one of my startups, the one before Stax, we bootstrapped the entire thing and we grew it okay. Like we were profitable in the first year. And, we had just nice straight line growth. We didn't have hockey stick growth. We didn't have hockey stick growth because we knew we were making money, but we weren't accelerating it with outside capital, right? And so I thought, at the time that from outside in, it is a successful company, but, even within your successes, there's like hidden failures of missed potential. Right? Would probably be the best way to say it. I think another early company, I had a SOX compliance software, And I didn't know anything about pricing. So I just kind of like put my finger in the air and picked a price. It was $5,000. So we charged, I landed 5 publicly traded companies. That for like a nobody, right? Like that was a big accomplishment. And I only charged them $5,000 a year for my effort for this SOX compliance software. Meanwhile, the departments that were running off of this software, those budgets were in the millions. So just not understanding your pricing, is a more tactical thing. So I hope the few of those ideas are helpful.
Yeah, thanks. Go ahead, Keith. Did you have a question?
I did. So what would you say, I'm sorry, I'm not familiar fully with your company, but what would you say would be like competitive advantages or main selling points for your company, and how did you as a startup address maybe or quantify the total addressable market versus competition, and why you guys would win? Like, how did you sell this not only to VCs but to customers?
Yeah, I mean, I think there's in one hand, you're sort of splitting the market if you're all targeting the same personas, and that's okay, right? But also, if you have incumbents, the reality is that they're ultimately going to capture more of that TAM, even though it is theoretically addressable. Those incumbents are going to be able to leverage their brand and their existing base and their investments already in the roadmap to be able to acquire customers at a faster pace than you. I think one of the key things that is really important is to look at what are our competitors hiring for, like what directions are they going, how is their go-to-market, not just their pricing, but the way that they package their products and services in a way that we can attack a different part of the market, right? Where they won't be able to do that, what we do. So an example would be Stripe and Square are kind of our biggest competitors in the market. And what we do is we charge for our software, a subscription, and then there's something called interchange. And Stripe and Square, they obfuscate, they don't tell you what the interchange is because they're profiting off of that difference. They don't tell you that. And so what we did was say, well, we're going to make this model where you're buying our software and we're passing through the cost of processing. And our biggest competitors, they can't do that because then they have to expose all of the money that they're currently making off of their existing customer base. It's too difficult for them to pivot. And that's ultimately, how we were able to kind of target a different TAM and have a high confidence that we would be able to close those customers.
Yeah, that's great. Carolyn, you have a question?
Thank you, Gary. Well, I have 3 questions, but the 3 questions are tied together. So now you are a unicorn. Like I saw your LinkedIn profile. You
So
guys
Carolyn, do me a favor and tell them a little bit about yourself and what you're doing.
Oh,
Tell 'em
thank you,
about-
Gary.
Yeah.
You're always so kind. I am just a humble, very humble little girl running in the hills here, chasing after horses. Very simple.
And
That's
tell her about
my-
your
Yeah.
background with Stanford and things.
Well, I was luckily accepted to Stanford in molecular immunology. My background was DNA transcription. Study how DNA, nowadays everybody know the whole secret, how the promoters work, how the exons work. Anyway, so my background was molecular biology, but I entered the autoimmunity. Like my boss at Stanford, he's now the head of Human Genome Institute in Australia, actually. And so he started the first transgenic model to study autoimmunity like diabetes, arthritis. So I contribute my molecular biology background to study autoimmunity, the T cell, B cell, how this autoimmunity got turned on in our human body. Anyway, story short, during the Stanford era, luckily, these kind of Ivy League universities, it's not about getting a degree. It's about you are running into visionaries, can shake the ground and change you upside down. So that totally transformed me, after the Stanford years. It's not about the degree. And so from there, I got, kidnapped by the universe. And left Earth completely, and my old soul left me completely as well. So luckily, make the story short. So ever since that transformation, I have been looking at the whole entire planet collectively, not from the point of view, I wanted this, me and I and Carolyn disappeared. It's all about coming down, zooming everything on Earth collectively. That's how I started this startup. I have always wanted to build this startup, but I was not quite ready myself. And now it's the right timing. I wrote a cover letter to Gary, like, this is my home run. And some people recognize the energy. They call me the unicorn because I developed those virtual modules and people had never seen before. And also I call it's my home run, just like Jacques, you go through a lot in your life, finally you land at a point, it, your heart, your soul, it's there. Like every single day I told my friends, like, I am in heaven, because as you know, when you tap into that home run, everything started to align itself and you are in this real celestial flow, whoever you run into or whatever event
So
you
Carolyn,
run into, it's
tell
all
them,
coming. Yeah.
do me a favor, keep it short on here. Tell them, just so you've got this, the metaverse company, and I wanted you to just get her background. She's got a wide background, Jacques. I mean, it's and she's I'm hearing the kind of thing she's talking about. It's interesting. I'm hearing it a lot all over the world. I'm hearing it from ultra high net worth folks. They're really concerned, and and this kind of metaphysical thing is starting to, I hear about a lot. And so that's why, anyhow, Carolyn's startup, she's in an early stage startup, and we love her. She can look at so many things that it's incredible, and she's very humble about it. But so your question, go ahead. Tell them your question, Carolyn.
So Jack, wow, I am honored to be here, being surrounded by like Sanjay, Dave, I have read your books and, hear your talk. I was in Dave's podcast. Actually, even Dirk, I think Gary interviewed you as well in his podcast. So it's a great honor to be here to learn from all of you. So my question for Jack is the same question, but 3 different stages. First stage is, now you're a $1 billion unicorn. How far away or how far off from your original thesis? How many pivots did you go through? And the second question is, as you know, before the AI revolution, things are much more incremental, but you still have to wake up every day facing a lot of changes. And a lot of big guys are jumping out to trying to get a chunk from your market share, or another new startup having something more awesome, just like Google took over Yahoo's market share. So as a CEO, we are facing that every single day, how do you deal with that? Yeah. What makes you decide, no, I'm going to stay in my own course, and you guys can be, super new excitement, but I'm going to stay on my own course. So that's the second question. The third question is, now we are facing the AI revolution. It's not incremental anymore. It's totally more than disruptive. So we are waking up now. 90% of companies, if you don't know how to pivot, or if you don't, change, you are going to be gone. You're going to be obsolete. Your technology is no longer valid. Today is a new world, completely new world, not incremental anymore. So how do you deal with today's landscape? So 3 questions, but it's all the same in the same line. Thank you.
Yeah, no, absolutely. So I'll answer your first is, you know, in some ways, the original thesis is still pretty core, but from what we've raised capital on and where our growth is, our original thesis is, you know, it's kind of stable, right? It's growing a little bit. Our core business of, you know, offering payments to service-based businesses. And, you know, frankly, there were already plenty of competitors on the market. It's not like that was like a novel idea. We just thought that we could do it better, incremental, to your point, right? You know, how we've raised capital though, and where we're getting like the parts of our business that are getting, you know, 1,000% growth. Yeah, those are completely different. And at the current trajectory, like how we make money is going to be, the mix is going to be completely flipped around, where it's all going to come from these new areas, which is, you know, our partners have asked us, or sorry, they weren't partners. They were just developers originally, kept asking us for API docs. And so we said, you know, let's just take this model of what we know really well. Let's package it up for SaaS companies and let's make payments a part of their strategy. Let's double their valuation, show them how to take advantage of their user base and add payments as a core revenue generating offering for the business, right? So that was our pivot, and that's likely going to be in the future, primarily how we get most of our revenue. So yeah, we pivoted a lot. You know, I will say, as far as staying the course and having, you know, these disruptive changes, I think it's a little nuanced. There are lots of disruptive technologies out in the market for embedded finance, for, you know, crypto, for all of these things. You know, crypto almost seems like old hat now. It's like, yeah, everyone's got a cryptocurrency, right? That doesn't even seem like a new thing. But realistically, less than 10% of, I don't know the exact, so I'm pulling this figure out of thin air, but I'm pretty sure less than 10% of people have actually transacted with a cryptocurrency. I believe that's probably an accurate statistic. And doesn't mean they don't own crypto, but like actually gone someplace, right? So when we talk about disruption, sometimes the way that, you know, media and popular trends are, it makes themes seem disproportionately more adopted than they really are. And you look at this across all industries. I mean, look at food, you know, distribution as an example. Still very low tech, very little technology involved in there. People, when I was talking to the founder of Odang Hummus. He was on Shark Tank, and you know, he was just telling me, like, they don't even know like where their products are being, if they're actually being put up. Meaning, like, they will distribute it to all the stores, and the stores will just report back sales. But they don't have any technology to know that it's actually on the shelf, or someone forgot it in the back room and it's still on the pallet, right? That industry has still not changed in the past 50 years. And so, you know, but people are fine, right? Like sometimes industries don't need that change to continue to survive. It doesn't mean they're not ripe for disruption or that other things can't happen. But my point is that just because there is a new technology on the market doesn't mean you're going to die if you don't adopt it right away. I think you will also die by not paying attention to your customers and what their needs are. Ultimately, if you're solving problems and bringing value to your customers, you're not going to have a problem surviving on into the future. And in fact, you may actually be doing yourself a disservice by trying to jump on every trend without having an understanding about how you really want to create a strategy around implementing those new technologies in your business model, if they're even relevant.
Thank you.
Thanks. Any other questions?
Yeah, Jack, Sanjay here, founder of Runday. We're an always available AI for appointment growth. I was just up in Canada last week talking to a partner of ours and doing kind of a gap analysis of the market. And payments actually came up as a critical thing that, you know, working together, us handling certain aspects, them handling certain aspects of a business, you know, point of sale and payments was actually something, you know, that could give us an interesting competitive edge. We'd love to have a conversation, perhaps offline, about how we could include a payment process into AI-enabled text messaging. For example, you're booking a couple's massage, it's looking at 4 or 5 different resources to kind of make that happen, but then it's like, hey, there's a good time and date. Let's go ahead and process the payment to set this up. And so sounds like you guys might be able to help us with that.
Yeah, we certainly can have an offline conversation about that. That's definitely a core offering of ours. But kind of going back to the general advice, right? Like if your software is enabling some type of commerce to happen between a business and a consumer, or between businesses, then there is most likely some sort of a payment strategy that you can implement, to really participate in those transactions as a source of revenue. So I think that our pitch to the market has been that if you're a SaaS company, we'll help double your valuation by creating a new lever for you to pull for revenue, and that's embedded payments.
Very interesting. Also, you mentioned kind of acqui-hires earlier, but have you grown more like your technology through acquisition? And was there a strategy around that?
Yeah, so when I was referring to that earlier, we have made acquisitions. So we've made four acquisitions, and primarily technology based. So we had more revenue than all of those acquisitions, but the combination of all of our IP makes us a lot more of a compelling value to the market. But to answer your question. Sorry, just remind me again, your question.
Yeah, so I'm wondering, in terms of those acquisitions, you had more revenue.
The growth.
Was your fundraising and the acquisitions kind of in tandem?
Yeah, no, I mean, definitely fundraising helped secure enough capital that we can complete those, but pretty much all the growth itself is organic, in the sense of we would take that capital, and I would say most of it was deployed to sales and marketing.
All right, thanks, Sanjay. Any other questions? That's great. So, we're running a little bit late on this thing, Jacques, but tell me about, so closing thoughts and any words of encouragement for the startups out there.
Yeah, I mean, I would say this is an awesome journey to be going on. I think you're already in the 1% as far as people who are willing to take risk head on and have something that you are passionate enough about to create a business and have grow a team that's going to come to rely on you to be successful. And so just, don't forget that, when things are weighing you down, that you're already a success story as far as being one of the few who have sort of the internal drive, and also the skills and the ability to really build something, right? And just because you're going to have things that are going to come from left field, but you don't need to dwell on them. What you really need to do is figure out what decisions are you going to make as a result of those events. And if it's just a thing that happened to you and there's really no decision to make, then it really shouldn't take up any of your mind share, right? Everything that you need to be focused on every day has got to be a decision about something that you're going to do that's going to make an impact on your business. And, as long as you do that every single day, then I think you're going to be on the right path.
That's great. Thanks. So I want to thank all the GSD portfolio companies for joining today. For all that couldn't join, it'll be recorded out there. You'll be able to take a look at it. Take care, and thanks so much for taking time out of your busy schedule. Jane will coordinate a meeting, Sanjay, so we'll get that set up. So stay tuned on that. looking forward to you. Get out there and get them. For those in the current cohort, we got a lot of work to do, so keep on top of it. For those in the past cohorts, let's get shit done and keep it moving. If you got any questions or concerns, let me know, but let's go out there and do it. You know, I'm proud of each and every one of you, and let's keep moving forward as fast as we can. Take care of yourself, stay happy, stay safe, and stay healthy. Take care, everybody.
Thank you.
Bye-bye.
Thank you.
Bye.